What's going on, guys? Welcome back to another video. In this video, I've got another extremely important AMC update to bring all of you this afternoon. So what we are going to be covering today is exactly how AMC getting to $100,000 per share or above is actually possible. Now, I know a lot of people have said that those price targets are crazy, and they are actually kind of correct, but we're going to go over exactly what these price targets mean. We're going to briefly cover how the geometric mean actually plays into this situation, and we're going to do a brief economics lesson to show you guys exactly how we are in the best position possible in order to determine and set the price that we eventually would want to sell our AMC position. So we have a lot to cover in this video, so make sure you guys stick until the end. And if you guys would like to help out and support the channel and earn 2 free stocks with Webull valued up to $1,850, make sure you check out that link down below in my description. So at the current time that I am recording, AMC is trading right around $13.19. We've seen another pretty substantial green day for AMC, up 3.22% at the current time that I am recording, with a high of the day in the $14.33 range. Now, I want to bring something up to you guys that I think is extremely important. When we come over to the option chain, we have seen AMC have a massive rally up over the last 2 days. Now, there's a lot of open interest on a lot of these options contracts that expire next week. Now, I don't think a lot of these institutions have started hedging for all of these options contract as of yet. Now, in order for them to hedge this, they need to go out and buy the appropriate amount of shares on the open market of shares of AMC in order to cover these contracts. And for every contract that you see here, the actual institutions selling these options contracts need to go out and buy 100 shares. So when AMC spikes like this, they need to start coming out and covering these $15 strikes. We can see that this is going to be about 2.3 million shares of AMC right here. Another 3.5 million potentially at this $20 strike as well at the end of next week. So if AMC keeps rallying up, we are going to see this positive feedback loop of massive buying volume because all of these institutions need to start hedging these calls that they have sold. Now, when we come over to this Reddit post, we're going to take a look at exactly how geometric means and averages play into this AMC short squeeze situation, and then we're going to get into some economic theory into exactly how we control the price. So when we come over here, the biggest flaw with the 500K can't happen because that's 10 times all the money in the world argument is usually it comes from multiplying the outstanding shares by 500,000. Yes, that would be 246.5 trillion, which is ridiculous because that would mean we would shoot right up to 500,000 and every ape has days worth of opportunities to sell at that price point alone. When you think about how previous squeezes have played out, that's not really what happens. The price shoots up, comes right back down, and it's extremely volatile. There's going to be a very short time frame to sell at these top peak numbers. It actually could be a matter of seconds. So not everybody is going to be able to sell at the top. If you are extremely lucky, you may be able to get filled at those levels, but this is where the geometric mean is going to come in. So long story short, the geometric mean is used in finance to help calculate returns over time. Say you made $1,500 off of a $1,000 investment over 10 years. How does each year break down? What is the average per year? That is a similar situation to apes taking profits. Now, when we come over to Investopedia, we can see that if we come over to the exact definition at the top, in statistics, the geometric mean is calculated by raising the product of a series of numbers to the inverse of the total length of the series. The geometric mean is most useful when numbers in the series are not independent of each other or if the numbers tend to make large fluctuations. Now, coming down a bit further, the geometric mean is used in finance to calculate average growth rates and is referred to as the compound annual growth rate. Consider a stock that grows by 10% in year 1, declines by 20% in year 2, then grows by 30% in year 3. The geometric mean of the growth rate is calculated as follows, and we can see the calculation right here, and this would yield a 4.6% annual yield. Now, when you apply that to a series of actual prices, you can kind of calculate an average price, and when applied to this AMC situation, you can actually figure out what the average price might be of all of the selling once the squeeze ends up playing out. So this, let's say right here, imagine for the sake of the argument, this is roughly what the mother of all short squeezes might look like when we get our tendies. So this is kind of the series right here, and when we come down, these are going to be all of the different plots. So there's going to be 21 different prices, and these are going to be all the different prices. We can see that it matches maxes out at 12 at a million. This is just a simulation right here of what could possibly happen. Then we have it coming back down back to these lower levels. The simulation peaks at 1 million and has all that area underneath the blue line that equals profits for the apes who own the entire float multiple times over. Each of the points equals one of the 21 time units that could be days, weeks, who knows. Basically, how many bricks make up the pyramid? There are far more in the first few bottom layers than in the higher layers combined. So we can see right here that the geometric mean out of this simulation is going to be 11,273.08. So that could be seen as $11,273.08 per share. Now, there's no real way of knowing how many apes own how many shares until Adam Aaron releases that on July 29th. Now, this is going to come in to the economic theory a little bit later in this video, but we can see down here that Matt Kors has actually put out a very interesting tweet. It's going to be a Twitter poll. This came out a little while ago. And we can see that he's asking how many shares do you own, and we can see that the total votes right here in the breakdown in percentages. Now, it's a total right here of about 2.6 billion shares. Now, when you multiply that by that geometric mean price, you get about $30 trillion. What I also want to bring your guys' attention to is that there's a pretty bold claim here that the DTCC is insured for 67 trillion. Now, it's not essentially insurance. The way that a couple of videos have broken this down, in my mind, you need to think of it as a university endowment. So all of the members of the DTC essentially pay dues to this organization every year to be a part of it. Now, what the DTC does with all of these funds is they typically put it in low risk financial investments in order to generate some returns, in order to create a rainy day fund in case anything goes terribly wrong, such like we saw back in 2008. But what we are seeing here is that the NSCC, I've gone over this many times, this 005 is increasing the member premiums from $10,000 to $250,000. That is going to bring in an additional about $860 million for the DTCC. Now, I know this geometric mean stuff can be pretty complex and complicated, but what I really want you guys to take away from this is that when we see this massive squeeze for AMC and we potentially do see the price get all the way up to 100K, the geometric mean is telling us that the average price that people are going to be selling at is going to be much lower, which makes these massive price targets a lot more plausible. Now, let's get into some of this economic theory. Now, the first thing that we need to go over is how many shares of AMC do retail own? So we can see AMC said it had 3.2 million individual shareholders as of March 11th who own 80% of the 450 million shares outstanding. Now, when we come over to this right here, we can see that Adam Aaron and the executives at AMC have actually pushed back the shareholder meeting, allowing for more votes to come in. So people have been buying shares since March and the last record date, meaning that they are going to have more shares to vote on. So we can see this shareholder amount massively increase and that 80% number potentially get over 100. Now, what I want you guys to really understand is going to be these basic concepts of supply and demand. Now, the overall stock market in its most general and basic sense is a reflection of the supply and demand pressures in the overall market. If you hold everything else constant, all of the other factors that could play into a company's share price, the stock is expected to move according to the selling pressure and buying pressure out on the market. So let's say a company dilutes their share price, offers a bunch of shares and sells them on the open market. That would typically cause the share price to decrease because there is more selling pressure flowing into the stock. And on the other hand, if there is more buying pressure or people who are holding a stock do not want to sell it, that means that there's going to be more scarcity out in the market, meaning that good, meaning the stock, is going to get more expensive because people do not want to sell their asset and they will be more likely and want to take a higher price in order to get out of their position. What we are seeing right now with AMC is that investors in the overseas are now unable, or it's very difficult to actually buy shares of AMC, meaning that the supply of shares is drastically decreasing. And we can also see that retail investors, as of the most recent record date, own about 80% of all of the AMC shares. Now, I want to give you guys an analogy. So say AMC investors, let's say we're water investors this time, and we are actually taking physical delivery of 80% of the supply of water in the world, so drinkable water in this case. If we do not plan on selling any of this commodity in the near future, then the price is going to drastically increase because this is a good that people desperately need in order to survive. Now, in this case, the hedge funds desperately need the AMC shareholders to sell their shares back to them in order for them to cover. This is why us holding and not selling our shares is so important. This is going to then mean that the hedge funds are going to be willing, and they're going to be forced to pay a higher price in order for them to cover their short position. And this is what this chart represents right here. So we can see this blue line represents supply, the red line represents demand, the x-axis down here represents the quantity, and the y-axis right here represents the price. When we see the supply decrease, meaning we have a shift left, we see that the quantity supplied is going to decrease and the price is going to increase, meaning we could see this supply line right here continuously shift left all the way up to the top over here when we see this squeeze, and the hedge funds are going to have to cover their position. Now, in order for the squeeze to actually happen, we need to see the hedge funds actually cover. Now, we have no evidence really at the current time that we are seeing funds actually cover their AMC short position. Now, in order to see a short squeeze, you need to see these shorts actually get squeezed, and they need to cover their position, meaning that the spikes that we have seen this week for AMC is not the actual short squeeze at all. I know a lot of you guys know that, but what is more likely happening right now is that a gamma squeeze is starting to take place, meaning that a lot of these institutions are starting to cover all of the naked calls that they are selling. Now, this could create a positive feedback loop and increase the price of the shares of AMC, where these different institutions that have been aggressively manipulating the share price by naked shorting are going to get margin called, and they're going to get forcefully liquidated out of their AMC short positions. This is why we see a lot of people on the internet forums saying we set the price, meaning that if we do not sell our shares and create more supply in the market, we determine the price that we want to sell our AMC shares. Now, when we see these massive spikes in the share prices of AMC in a very short amount of time, when we come back over to this supply and demand chart, this actually creates an increase in demand as well. So we are seeing a shift left in the supply, so we can see that the price increases because of this as well. But when we see a shift right in the demand, meaning that demand is going, the actual demand for the shares of AMC is going to increase, we see another increase in price as well. So this is essentially going to mean that day traders could come in. A lot of people could be talking about the situation going on with AMC over the weekend, and next week could be a huge FOMO rally for AMC, and we could see a massive increase in the actual quantity demanded for shares of AMC, pushing the share price even higher while the supply continuously decreases. So that is going to conclude this update for AMC. If you guys enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps me out a whole lot in getting this information out to as many people as possible. And if you want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a very profitable day, and I'll see you guys in the next video.